Good evening, and thanks for joining me tonight again for one of our Fireside chats, which has been a series on different topics as we've worked through this coronavirus recession that we are most likely in, and certainly the severe bear market that we experienced in very short order, as I recently sent out in our economic presentation last week. In line with that, too, before I get to the topic I wanted to talk tonight, wanted to say that bear markets generally don't destroy wealth. What does destroy wealth is investors' actions during bear markets. We often make some tremendous mistakes, and I just sent out recently a piece on that which showed that during bear markets, oftentimes the stock market rallies significantly in one-day increments when nobody really expects it to occur, and many of the people who got whipsawed and scared out of stocks subsequently miss those rallies. Now, bear markets can go on and recessions can go on for a long period of time, but you just have to have the wherewithal to withstand and look forward and say when and how do we position our portfolios to best recover for the market recovery, which will eventually occur. And along with that, I wanted to talk a little bit about gold, because I've been getting some questions from clients regarding gold. And the last time I got this was during the run-up of gold that we had leading into 2010, where we were coming out of the financial crisis, and gold was at that time outperforming the stock market, much like it has this year. And invariably, when one asset class is outperforming another, people will ask, is this the right time for us to be investing in gold? And if you look at gold in terms of its totality, of all the gold that's ever been mined in history, there's been, by most counts, about 190,000 tons that's been mined. And the remarkable thing is that's about $10 trillion in value. And it would be nice if you had this big, beautiful building that was effectively a 70-foot cube. It would be 7 stories high and 70 feet wide and 70 feet deep. And it would be this big, beautiful cube that we can look at to think about as an investment in gold. And of course, if you're owning gold, you own a little piece of that gold. But I like to think about in terms of the alternatives of what you could invest for that same $10 trillion of value. And from that perspective, you could own all of the farmland in the United States. It's about $3,000 per acre on average for the farmland in the United States. There's about a little over 2 million farms with about 900 plus acres. And that's about $2.7 trillion in value. So instead of having that cube, you could have all of the farmland in America. But you could also have about 20 Procter & Gamble companies. Or for better sake, they're about a $300 million market cap, of course, which pays a nice dividend. But contrarily, if you wanted to take some of the largest companies in America, for that same $6.3 trillion, you could take Microsoft and Apple, Amazon, Google, Procter & Gamble, JP Morgan, Coke, and Pepsi. You could add in Berkshire Hathaway, one of the wealthiest men in the world. You could take his company, throw in Home Depot and Disney and Walmart. You could own all of those companies in addition to all the farmland in America. And then also you could have about $1 trillion in cash just for some walking around money. Now, if I gave you those two choices, which would you choose? Would you choose a big, beautiful cube, which doesn't add any utility? Or would you choose all the farmland in America, those great American companies, and $1 trillion of walking around cash? And the answer, of course, should be the latter, because the latter provides a great amount of utility. Gold, if you take my ring here on my finger, really doesn't have much value in the sense that it has sentimental value, and you could use it in certain electronic, and it has some applications that it could be some form of usefulness. But it doesn't produce any income. It doesn't produce any jobs. It doesn't produce any food. And it doesn't, unless I convert it for cash, it doesn't add much value. So I'd rather have the cash rather than that gold. And I often used to kid that maybe if you had a bar of gold or some coins in your closet and you saw Russian paratroopers coming down into our land, you might throw them a coin and hope that they spare you. I don't think, again, it would add much utility at that point, but it could. So the more important thing that gold does do is it's a store of value. And if you look at the price of a nice man's suit over time, that's definitely gotten about the same value as an ounce of gold. So today, you can get a nice Canali Italian suit for about $1,600, and that would, with an ounce of gold, be able to buy that. And it's the same 100 years ago or 50 years ago. Whatever the price of an ounce of gold is, will usually buy you a nice man's suit. Now, I generally like to get the Canali suits on eBay for about half the cost of that. But if you were going to pay full price, it'll be about an ounce of gold. And so, importantly, gold follows inflation over time. When you have an economic crisis, what happens to the cost of most goods? Well, it declines in value. So in the short term here, gold, due to speculation or people get nervous, this happened in the recessionary period during the financial crisis. What happened was gold prices fell off at first because, again, it was deflationary. And then with the amount of government spending that was occurring, gold kind of shot up, right? And that got people excited about gold as a potentially better investment. But eventually then when gold hit its peak, or just under 2,000 an ounce or so, it kind of went back down to around 1,200 and bounced around there for quite some time. And now we're starting to peak back up. Will it continue to go? It could. Speculators could come in there and you'll hear all kinds of crazy stuff from the far right saying, oh, we should go back to a gold standard and things of that nature. And to me, again, gold standard is only good if you enjoy breadlines, right? Because you can't print money and you have a monetary supply which is then limited, and there's not enough gold that's ever been minted to provide enough liquidity for the monetary and economic system that we have today. So that's not a viable option. So should you be investing in gold right now? In my opinion, we're going to be in a deflationary environment. Therefore, we shouldn't be owning gold. Will gold go up in the short term? Possibly. Speculators could certainly drive that price higher, but longer term, I don't think it's going to be near as good investment as, again, farmland or a company or even cash, which can be immediately used. When you see a lot of the ads on television that tell you to buy gold coins, remember there's so many more hands that are involved in that trading of that asset, and you're losing a lot of worth too. If you definitely want to buy gold, you could certainly do so by buying some of the ETFs that are out there. It's probably a more efficient means of doing it rather than storing the gold in your home. I often kid that, if they looked upon us from Mars and they saw that we take all this time to extract gold from the earth and we shine it all up and after we take it out of the dirt, we go and put it back into the dirt and we put guards in front of it to secure it. And again, it's kind of confounding for a person like me to understand this gold. But gold is almost a religion to some people. So kind of like as I often kid that, you should never short a gold stock, you should also likely not go against the people who are touting gold. And I'm sure I'll get some very negative feedback from this video from those who are the gold zealots, but I just don't think it's a good spot for us to be investing over the long term. If it was an inflationary environment, then we might have some gold in our portfolio to hedge inflation risk. But anyway, if you have any questions, as always, feel free to give me a ring or email us at any time. We continue to deeply appreciate your trust as we work through this recessionary period. It's going to be a long slog. I don't expect things to turn around quickly or anytime soon, as in most recessions. And this one, as we go back to work eventually, in fits and starts here, it's going to be a difficult period of time, and it's important to think longer term. And again, from those great companies that we own, just collect the dividends while we patiently wait, while companies find ways to maintain their earnings, grow their revenue over longer periods of time as we work through this. But thank you very much, and don't hesitate to call with any questions. Good night.